Let's bring in and talk about what this means for the insurance industry. Let's bring in Mike Wells, Group Chief Executive of Prudential, attending the Singapore FinTech Festival. And he joins us in a first on CNBC interview. And Mike, great to see you in the flesh, in person. And that's a huge change, right? I mean, we're back to long haul, red eyes, and jet lag, and I guess it's great.
It is wonderful. It's great to be at an event in person of this scale. As you could expect, there's a tremendous amount of precautions taken, and Singapore, as always, it's incredibly well organized in the logistics of it. But it really is nice to do some traditional meetings, even with masks and the number of tests and things, and some of the more normal networking that doesn't occur necessarily as easily on video. So it's an absolute pleasure to be here. I'm really enjoying it.
And it's fantastic to have you in person and live, Mike. So listen, let's get to talking about your space, which is insurance, and how it fits into Web 3.0. And that's the thing. Existing insurance products do not fit into Web 3.0 because they were made in the past for the past. How are insurance products, or how are you either modifying, evolving, or even creating new insurance products to work in Web 3.0?
So I think the context of 3.0 is pretty broadly defined now. But let's start with the core of your question. So the old models in insurance were always big data models. We call them actuarial models, and we have varying ways we looked at that. But the tools now allow you to take the old style of underwriting, which is looking at massive amounts of data about the consumer, the country they live in, et cetera, and do that in a fraction of the time and on much more dimensions on the technology. The other thing that's new, though, with I think the various concepts in 3.0 is you can take more real data, more live data, behavioral and client preference and interest, and align them with more customization of what a consumer wants. How we're dealing with that. Pulse, our health ecosystem, and growing into a wealth ecosystem. That platform with we've disclosed 30 million plus downloads of that across now our Asia only and Africa footprint. It's tremendously popular with consumers. You can put tools in their hands that create an ability for them to be healthier. And that is incredibly valuable and moves our role from insuring an event to having a more positive impact on the insured, if you will's life, and better information. And they're talking to us throughout the year instead of opening a statement once a year. Those are all good. There's some new implications of that. For example, life, as you deal with chronic illnesses and COVID and things, you're getting longer life expectancy. In Singapore, that has tremendous implications on a number of retirees and those sorts of things over the next few years. And so that goes into our wealth and our retirement businesses. But all of these positives have other things you got to consider. But the tech makes you be able to do things very fast and highly customized for the customer.
Mike, but as those processes get more digitized and as you scale big data, especially in the Chinese context, doesn't that put a regulatory target on your back, and how are you managing that?
No, I think in most markets, including China, the regulator that we're in has targets for insurance penetration. And there's a very high expectation on the quality and accuracy of the delivery. Did we give the client fair and accurate information? Is the product well designed? They want the insurers out of shadow banking, for example, and to actually insure long-term investments. And then what we do in China and other markets that's important to the government there, policymakers, is that we reinvest those proceeds long-term, in the real economy. So you go from a consumer keeping their money in cash, self-insuring, right, and generally very short-term investments, to we de-risk that consumer's position, and then that money goes back in these economies in a longer-term, more sustainable investment thesis. So I think it's a win-win for markets like China, and that's how the policymakers there see it. But there's certainly an expectation in all markets that at our size and scale and leadership position, that we lead on compliance and the quality of the delivery. That's the regulatory piece that comes with being as large as we are in Asia.
Right, and you're targeting 50 million customers in Asia and Africa by 2025. Mike, I'm sure data and digitization is a big part of that effort. Are you on track?
So we've continued to add more clients, as again, we entered into the digital space. This probably won't surprise you that the Pulse clients we're getting are 10 years younger than the client we get through our very large agency, or we have the region's leading bank distribution model with 26,000 plus branches. We're getting younger clients. You're getting access to new clients. The group business is getting new clients. So we're seeing a tremendous growth in the number of clients coming on board. But again, this is customizing for their situation. So in some of the harder hit COVID markets, that may have meant getting a smaller, more bite-sized health-only product to them initially as a relationship. In others, it means a more high-end. Singapore, for example, we have very sophisticated high net worth product that is extremely popular as well. And we disclosed in the equity filing we did a little earlier this year that we continue to grow our business double digits, and without sounding callous, we're a benefactor of a lot of the dynamics of COVID, both in the demand for healthcare and the consumer and desire to do things on telepresence. Our entire operation now, distribution-wise, every one of our markets can sell as we're talking now, and are doing it very effectively.
So, Mike, new insurance, and with the capital N there, or insurtech, if you want, under or within Web 3.0, basically gives policyholders and customers, or is more likely to give policyholders what they want and what they need, which is great, and potentially at even cheaper costs, lower premiums. Do new insurance products under Web 3.0, though, mean that folks like yourself at Pru are able to manage your own risk better?
Yeah, absolutely, they do. You have more information. You have you have more. It's more customizable, and you're bringing services, I think, that aren't traditionally coming from an insurer. There's 47 partners, for example, on the Pulse platform that are tech. There's 2 local ones that we're bringing out now with this fintech event, a company called Smarter Health and Preview. One is provides access for consumers to screening and other capabilities and appointment setting embedded in the app. The other is got some great capability on allowing a consumer to manage wealth. These are services that extend your relationship with the client far beyond a single point, a single risk. And I think that gives you, I think if we do it correctly, a longer relationship with client, not just more clients, to the earlier question. So again, the role of insurers is changing. We have to be have a more positive impact on the consumer and the markets we do business in. And we think we're doing that. And I think you have to, again, provide a lot of services that the customer might choose, and make it easy to customize to navigate those. There's a lot of choices without a decision process or advice isn't necessarily helpful. So your traditional channels, your agency and your bank modernize as well. And these are tools that, again, have produced millions of leads for our agency where consumers actually want help in making the decision. But if you don't do these, if you don't modernize your business like ours, you're left behind, no question.
Mike, can I circle back to China and the shift away from the one-child policy? That must raise some significant opportunities for you as an insurer. Can you sketch out what those opportunities are, how you are positioning, and to what degree you're going to lean in to the partnership with CITIC to realize those opportunities?
Absolutely. So we're growing very well in China. We're one of the again, the foreign insurers are relatively small compared to some of the local players there, but we continue to grow at a pace that's exceeding the market there, and we're very pleased with that. CITIC's been a great partner, is a great partner. What we're doing in China is what you'd expect on the health side, which is get health and protection products to a large part of the Chinese population. But the emerging issue, I think, from your point on the one-child policy, that is both a policy issue and then a great opportunity for firms like ours. The big one is the retirees, that you've got 300 million plus people by 2025 in China that'll be over 65. And the historic retirement model in China, as you guys are well aware, was family. So you're seeing a privatization pillar emerge in both the government policy and the consumer's interest in private retirement support. That's something we've got, a century plus of experience in. And then the other issues you see in China, Greater Bay Area is very important to us with our footprint around it. We continue to support the development of it between Hong Kong and the markets on the mainland around it. And I think the other that you see is, with our wealth management platforms in China, an extension into asset management in China. So we've got a lot we're doing in Greater China, And I see tremendous opportunity for us there. And it's we still haven't announced a version of Pulse, or if we're going to do that there. We're looking at that. And there's clearly interest in it given the breadth of its capability in China, but that's still in the future, I think.
Yeah. All right, Mike, just real quickly before we let you go, help us imagine or describe for us, if you could, the future of insurance under Web 3.0. Personalized, more customized. But I'm curious, does that also mean, I mean, you can basically get coverage by a policy on your cell phone, on your smartphone, right? But does this mean the whole business and the process gets less humanized as well? With technology and with automation. And I mean, it cuts both ways, right? Because you get a good insurance agent, man or woman, on your side, and this is somebody you're going to be wanting to invite to your kids' birthday parties every year, right? The flip side is, I mean, these can be, and you probably have to agree, these can be insurance agents, people that literally you want to run away from.
Well, we try not to have the latter, and I certainly have met them. And if I want to be left alone on an airplane, I can certainly tell the person next to me I sell insurance, and I can usually read for the balance of the flight. I think there's there's two things that are really going on. You're dealing with very emotional, very important issues for consumers, and as life events happen, as they get married, as they get pregnant, as they start thinking about education, retirement, things, these are not trivial decisions for families or individuals. So they do seek advice, and they want it from someone they trust, and that's a good agency or bank.